Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Ricardo Pero, who's the CEO and co-founder of SellersFunding. He has 20 years of experience in corporate treasury and wealth and asset management. He's an investor and advisor to companies in the US and Latin. Ricardo has taken on various director roles in leading financial institutions such as JPMorgan, Citibank, and Merrill Lynch. Ricardo has done his MBA in finance from Columbia University. Welcome to the show, Ricardo.
All right, thank you for having me here.
Awesome. So, I wanted to understand, how did your journey start into this crazy world of startups, and what got you to start SellersFunding?
Yeah, so a little bit of my background. I moved to the US in 2000, working for Citi.
Okay.
And I mean, in my 15 years of banking, I kind of specialize in building or restructuring areas from the ground up. My first big assignment was a JV between Citi and Salomon Smith Barney back then,
right.
in the early 2000s. So I kind of got that flavor of, building things from the ground up. And of course, when you do that, working for a big organization, you have all the resources. So it's kind of, I thought it was hard, but it was easy, right? Because you were a phone call away from calling the legal team or treasury or finance, and you have all the resources available to you. And then I ended up learning the hard way that starting a company from the ground up is completely different.
Yeah.
But that's how I started. I think that was probably the foundation for me to start SellersFunding and to leave a big organization to start my own business.
Correct. And why specifically SellersFunding? Were you thinking about this idea for quite a long time, and that too e-commerce?
Yeah, I wasn't actually no. When I left JPMorgan, I had two things in mind. I knew that I wouldn't go back to work for a big bank.
Okay.
I wanted to learn something new and apply my experience to build something meaningful. JPMorgan is kind of an exception of, I think they do a better job than other banks in terms of investing and partnering with startups and technology companies. And I learned a lot there. But I think that in general, the financial industry has a lot of legacy in their, in the way that they approach and manage their technology. And there is plenty of room for fintech companies to disrupt. So when I left there, I had no specific agenda or a specific idea. I said, I'm going to do some consulting jobs here and there and talk to as many people as I can. And then one day, a friend of mine called me. He moved his wholesale business from his website. He started selling on Amazon, ended up opening 3-4 stores. And then he called me and said, Ricardo, I'm growing. I'm selling 10 times what I used to sell 6 months ago. And I need workmen. I need help. I need working capital. I need to reorganize my finances. I need to understand all the fees that Amazon is charging me. And I don't have a CFO. So I said, okay, I'll do that. I'll play that role for some time. I'm gonna help you raise capital. And that's how I start to know a little bit more about the industry. And when I talk to banks, I always thought, okay, Amazon, multi-billion-dollar industry, the marketplace has thousands, hundreds of thousands of SMEs selling to the marketplace, should be a piece of cake. And to my surprise, banks were not equipped to underwrite the risk. And we are talking about over 5 years ago. So, and they still are struggling to understand that. And in the other side of the spectrum, you have these merchant cash advance companies, revenue-based lending companies, and they charge too much. And I thought, okay, there must be something in between. And then when I did my research, there wasn't something in between. And I thought there was a an opportunity there. That's where I started to build the model and to create idea of SellersFunding and develop the company from that idea to where we are today.
Very interesting. You talked about revenue-based financing, and before the call we were talking about how I did a thesis on revenue-based financing, and I agree that the some of the charges are a little on the high side, but how seller financing different from say merchant advance or revenue-based financing? Are there any big gaps when it comes to the charges or fees to the e-commerce seller?
Yeah. So when you look at what's happening to the world now, like you have, when I started the business 5 years ago, the lead time from purchase order to sale, depending where your supplier is located, could take up to 90 days. Nowadays, can take up to 180 days.
Oh, okay.
When you think about this revenue-based lending solutions, you usually take the money and then you need to start paying right away, right?
Right.
And usually they offer a very short-term solution, up to 6 months, no more than 6 months.
True.
You don't even have time to receive the product and receive some of the proceeds from the sale. So back then, what we did was we created a solution that covered that lead time from purchase order to sale up to 90 days. Nowadays, we are offering up to 180 days to high qualified clients. And that's an interest only period. So the cash out, the cash flow that you're using is very low. You're paying just interest on the amount outstanding, and you start amortizing after 6 months. That flexibility allows us to work with better quality and merchants that actually understand the need of cash flow and use that cash flow to grow. That differentiates us from most of our competitors. Some of our competitors now are offering 12 months, but it's still, you need to start paying immediately after. And when you take into consideration the small fee that they charge, they claim that they're talking about small fee, but when you have to churn that money or that fee 3 times, 4 times throughout the year,
right.
I mean, you add all the fees that you end up paying, it's way more than what we charge. And I love the way that they position themselves, because they say that is non-dilutive capital.
Yeah.
I mean, not even talking about my MBA, I'm talking about Finance 101 in my undergrad. There are only 2 types of capital, like equity and debt. Non-dilutive capital is debt. So that's pure marketing.
Yeah, no, I completely agree to that. And when it comes to revenue-based financing models, they usually talk about $10,000 as an MRR. Do you have any qualifying criteria for e-commerce companies to be accepted into SellersFunding?
No, we usually require 6 months of online sales history.
Okay.
A little bit more. We're talking about $25,000 of monthly sales.
Okay.
And we can start with that. Usually our average transaction size is a little, I would say, larger than most of our competitors. So okay. That's kind of how. And the other thing that we also do here at SellersFunding that most of the competing companies offer, we have the ability to offer to foreign companies selling the US working capital solutions. So we built in the last 2-3 years a digital wallet. We have a partnership. We use Citibank's global infrastructure to offer our clients the ability to collect receivables in multiple countries. We have a physical presence in the UK, and we also work with Canada and Europe. So we have that cross-border element that most of our competitors don't have.
Interesting. So you could be a UK-based company and apply on seller funding. That's interesting.
Yeah, the way I think about this, e-commerce is global, right?
Yeah.
So, I mean, if we look at only the US or one specific country, we're going to be probably leaving a lot of people out. And,
Yeah.
and the idea is to attract as many customers as possible.
Interesting. And what's the turnaround for applying on the platform and getting the funding, and how do you get the revenue data from merchants?
So up to $100,000, we are talking about a very quick turnaround. I would say from application to disbursement, usually is 48 to 72 hours.
Okay.
Anything above $100,000, we will require some extra due diligence, depending on the size of the facility, may take a week or so. It depends on how fast the information is available for us to perform the entire underwriting process. Okay. I would say a reasonable turnaround would be a week for larger transactions.
Okay, got it. And how do you get the revenue data from merchants, especially when it comes to marketplaces?
So we have connectivity through APIs. Okay. With about 10 platforms these days, and platforms and other partners. So we pretty much we try to make the onboarding process as seamless as possible to our clients. And so there are 4 steps. The first step, they provide all their personal and business information. Then they connect to the marketplace or platform they work with, and everything else we upload from the marketplace or the platform that they work with. We also connect with their bank account through Plaid, so we have a cross reference between the marketplace information and the bank account information, and with that we have probably like 95% of the information we need to underwrite the customer.
Interesting. And Amazon's third-party seller marketplace had generated anywhere from $25 billion to around $30 billion in profits in 2020. So what makes online platforms so powerful for direct-to-consumer companies?
I would say the omni-channel platforms or online platforms, they benefit a lot during the pandemic. Yeah. Because people will spend more time in front of their computers, and the convenience of shopping online played a big role in the way e-commerce grew in the past couple of years. I think that we're going to see a little bit of I wouldn't say a reverse to the mean. I still think that e-commerce faced a structural shift and saw a structural shift in the way consumers behave. Probably we won't grow as fast as we grew in the past 2 years. We're going to see more of a stable growth this year. But yeah, the main drive is being consumer behave, and I think that will still be benefiting, and those direct-to-consumer brands that were able to shift from, let's say, a brick-and-mortar presence to a stronger online presence will benefit from this structural shift in the years to come.
Got it. And Ricardo, before the call, we were discussing about direct-to-consumer brands versus Amazon sellers, and what would be the main difference? And do you think what advice would you give to Amazon sellers if they want to branch out of Amazon, or they're looking at different marketplaces?
Yeah, the main difference is how much you spend on marketing and on branding, right? Okay. So when you're selling on Amazon, you're probably not spending as much money on branding as you would if trying to to sell out of the Amazon ecosystem. With Amazon or other marketplaces, you're probably you're listing your product and gaining access to in case of Amazon, almost 1 billion people, I would say. Yeah. You have the majority of US households buying on Amazon. So it's a very powerful marketplace and you benefit a lot from that. But you have very limited data about your consumers and you cannot leverage that much the data, whatever data you can get. When you build your direct-to-consumer brand outside of any marketplace, I would say you have a stronger equity, like a more valuable business, because you have more data about your consumer. You're going to be able to be, once you get to that stage, you'll probably be in a better position to decide about new product launches and create promotions around holiday seasons and manage seasonality and so on. I would say that it's a takeaway. One thing is to gain scale faster through the marketplace, right, paying some fees to the marketplace. The other way to grow is invest heavily outside of the marketplace, invest heavily in attracting consumers to your website. It's a takeaway. It's not easy. I would say the bulk of our clients, they start with Amazon, and at some point they have the financial strength to grow outside of Amazon, and they invest in that branding outside of Amazon to paid media, Google, Facebook, Instagram, and so on. But there is no right or wrong answer. It's just a matter of what you need first, or what you want to achieve first.
Got it. Interesting. And you talked about Instagram, and it said that Instagram and Facebook will be the largest, second largest digital shopping platform by the end of 2020. And the other marketplaces which are also coming up, but where do you figure eBay in this marketplace battle? Do you think eBay has a stronghold in the UK, or is it like a dying marketplace?
I wouldn't say it's a dying marketplace, but I would say it's probably a stagnant marketplace. I haven't seen meaningful growth from eBay. I would say they probably struggle to attract larger accounts. It's a very fragmented marketplace when you have a lot of smaller sellers selling there. eBay in the past you have that stigma of marketplace for used products, which is not the case anymore. But I think that stick with their brand, and I don't see, for example, our biggest and more successful Amazon sellers, when they think about a second marketplace, they don't think about eBay. Probably they would think about Walmart, or even selling in different marketplaces, Amazon marketplaces outside of the US.
Interesting. Got it. And talking about Amazon marketplaces, what are the other retail companies doing to combat Amazon's massive marketplace? Especially you talked about Walmart. There's a very interesting story, because they are investing a lot into drones and doing delivery through that. But what are some of these retail companies doing to combat?
Yeah, if you think about geographic coverage and financial strength, Walmart has everything that is required to challenge Amazon, right? I would say when I look at other giants, I would say Target is doing a very good job selling online. I would say Costco has the tools to be a major player in online sales as well. But I'm sure that the next Amazon is not a giant. I'm sure that the next Amazon is probably someone that is listening to us right now. It's going to come with a disruptive idea, and I wish I knew what that idea would be. But for now, I stick with my fintech background.
Interesting. And outside of Google ads and Facebook ads, how effective are Amazon advertising? And do you think it's really picking up, and that's something most of the e-commerce sellers would focus on?
Yeah, I would say probably if you look at paid media, is the area that grew the most among all the fees that the marketplace charges. Paid media grew the most. I think Amazon is doing a very good job in capitalizing the number of sellers and the number of listings they have, and creating that foundation for companies to advertise there and compete on their PPC marketplace. Let's put it this way. So yeah, I would say it's not as big as Google, of course. But I would say in comparative terms, I think that even Amazon outpaced Google in terms of growth percentage-wise in the last 3 years.
Got it. And the biggest benefit of Amazon Prime, especially in countries like India, UK, US, and everywhere, is the same-day shipping. Do you think the same-day shipping would become a standard in coming years with all the marketplace and most of the retail companies?
Yeah, this is a must, right?
Yeah.
Consumers go to the marketplace, and nowadays Amazon set the bar really high.
Yeah.
When you think about the US, the size of the US, and it doesn't matter if you are here or if I'm in Florida. If I'm in Florida, in the Middle West, or in the West Coast, or in the Northeast, if I order a product, I'm gonna get that product, if not the same day, next day.
Yeah.
That's a very powerful quality that Amazon offers to its consumers, and anyone that wants to challenge Amazon must offer at least the same service.
Got it. And especially during the COVID time, a lot of suppliers were dependent on Chinese manufacturers. Do you think the reliance on Chinese manufacturing is something a lot of e-commerce sellers are thinking about, on how do they dissociate themselves from these manufacturers? Because what if some products do you think some products will cease to exist if there's a trade war which escalates between US and China?
Yeah. There is I would say, since last year, we've been witnessing an increasing interest in finding suppliers in Latin America to replace the Chinese suppliers, or either other countries in Asia. But I would say, if I would rank all the countries that are benefiting from this trend, I would say Mexico is probably the number one.
Yes.
It's very convenient. Logistically speaking, is right across the corner, right?
Yeah.
And I would say LATAM in general, if they are smart, they could benefit a lot from that geopolitical situation that we have with China.
Got it. And do you have any advice for Amazon sellers who want to build their brand on Amazon, and if they're competing in a product category with Amazon basics, should they get out of that market, or what are your thoughts on that?
It's hard to find. I would say the biggest challenge for any seller is to find a niche that can be easy to scale, right?
Right.
You gotta, So I'm originally from Brazil, and I've been approached by so many companies from Brazil that they have a great product, but it's very specific for the country. Or I mean, you need to have a product that is not only known
Right.
in the US, but you can easily invest in advertisement. You can easily invest in some keywords to make that rank well and put you in front of the consumer in the first page of Amazon. Those are kind of requirements. But it's tough to have that balance between easy to rank,
right,
and very easily to invest in advertisement, but also easy to rank, because easy to rank means you don't have too much competition.
right.
But what I mean, it's kind of a very delicate balance, because if you have a lot of consumers looking for that product, probably you have a lot of competition, and your cost to advertise is going to be high. There is a balance there that needs to be taken into consideration. The other thing is that the higher the unit value of your product, the better.
Right.
And you also need to take into consideration dimensions and weight for your product, because that's going to have also a meaningful impact in your logistics cost. Those I would say three. If you look at from a P&L perspective, always look at logistics, advertisement as two key factors that will impact your profitability. And I would say those are the determinants of your success or not in the marketplace.
Got it. So you're saying logistics and the product cost
and advertisement.
Advertising, completely agree on that. And what are your thoughts on Shein? Do you think it's one of the most used products in the US? I was pretty surprised on that, but do you think Shein can be a great competitor to Amazon going forward as a marketplace?
I mean, the big question is, if you look at Amazon, apart from all the qualities that we just talked about, the vast majority of US households are Prime users. Right? So any challenging competitor will have to get into a meaningful position among the US households to be in a place to challenge Amazon and to be successful. And I think they're scaling, and I would say they are doing a good job. But I would say it's still, the US is still a very consolidated market. If I look at, we have like I told you, we have a presence in London, in the UK, and we cover the UK and Europe out of the UK. Over there, we have a number of regional marketplaces and niche marketplaces. The market there is well more fragmented than here. And I would say here we still need to see that to happen. And challenges like Shein and other companies still need to prove that they can scale in the marketplace. Consumers are here. No questions asked.
Very interesting. And I wanted to understand, since you are a CEO of a fintech company, how do you decide what to focus on in your day-to-day basis?
it's interesting. We raised capital last year,
Right.
and my partner and I, we used to wear multiple hats.
Yeah.
And I was in charge of finance, risk, a piece of sales, but compliance, operations, and he was in charge of technology, marketing. And I thought, okay, now that we raise capital, we're going to build a stronger team, and we're going to hire some senior folks, and they will help us. And I realized that I'm not working less because I hire more people. It's just that I became, if I don't delegate, I will become a bottleneck. So the way I manage my time these days, I have weekly touch points with the different areas that report to me. In the morning, we have an open call.
Okay.
With the key areas like sales, business development, marketing, and credit and operations to go over our daily pipeline. It doesn't take more than 15 minutes, but I think it's a great exercise for newcomers to absorb the company culture and to understand what matters and what not. The call takes 15 minutes, but we have like 50 people on the call. And it's a very proactive call with participants talking openly about the pipeline and their challenges and priorities for the day. So that culture building exercise for me, it's crucial for us to be successful as a startup that is grown from like 25 people in 2020 to 200 people today. And I spend most of my time making sure that the newcomers will be able to promote that culture and continue that culture with their direct reports.
So super interesting. And if you look at the investment sentiment which is going on these days, the talks about recession, what advice would you give to e-commerce sellers? Do you think you mentioned earlier that you don't think that the growth is going to be as high it was in the last 2 years, but what advice would you give to e-commerce sellers on how should they look at financing their growth?
Yeah, and I think that's going to be, the environment has shifted a little bit to a more negative sentiment in the last couple of months.
Right.
If you look at the industries that benefit the most in the last 2 years, I think e-commerce is right there.
Yeah.
And there will be some meaningful, I expect to see meaningful reduction in equity, in the appetite for investors to invest in equity related deals, in the equity piece of deals. So most of our companies, for our clients, they start from bootstrapping their businesses.
Right.
Some of them, they brought in outside investors to invest in the company at early stage. But I would say for now, I would try to find alternative source of capital to actually to bridge the next 12 months of growth or investment that they foresee. I think the market will be extremely challenging for new equity investors in this industry in the next 6 to 12 months. And finding and the main need to use of proceeds, let's put this way, that they will need is probably for inventory purchases, advertising, branding. So there are plenty of solutions. We provide solutions. Other competitors provide solutions that are debt-related, non-dilutive, if you want to use their jargon.
Right.
But I would look for longer-term solutions that are debt-related, especially for the next 12 months. If you can avoid raising equity in the next 6 months, you would benefit from like a more stable environment hopefully after year end.
Got it. Interesting. And I quickly want to do the top 3. What's your favorite business book?
What It Takes, Stephen Schwartz. It's not favorite, but it's something that I read recently, and it's very interesting. It's a big book. It took me a while to listen. When I moved from New York to Florida, in New York I used to take the train to the city.
Yeah.
And I used to read or listen to a book once and at least 1 hour going in, 1 hour going back.
Yeah.
And now I have a 15-minute drive, so I don't listen to too many books. So it took me a while to finish the book.
Oh, interesting. We'll put that in the show notes. And if you could go back in time when you started Sellers Financing, what is the one thing you would have focused on or done anything differently? Yeah.
I'd say exactly this exercise that what we are talking about finding the right balance between equity and debt. Right. I would say having spending more time thinking about the right balance and bringing the right partners is key to secure a sound foundation for the company to grow.
Yeah, no, absolutely, completely agree on that. And what's your favorite online tool? For example, Gmail, Slack, Zoom.
I like Gmail. I like Gmail because it's kind of easy to use. You can have you have different tools, and you can book online meetings. We use Zoom a lot, but I don't mind using Gmail because everything you have Google Docs, you have so many tools that are all consolidated into one.
Correct, absolutely. Gmail is one of my favorite products. We'll put that in the show notes. Ricardo, what is the best place people can reach out to you and know more about SellersFunding?
Look at our website, SellersFunding.com, or my email, Ricardo@SellersFunding.com.
Got it. We'll put that in the show notes. And Ricardo, thank you so much for taking your time and speaking to us. I really enjoyed my conversation with you.
Oh, thank you.